All right, what's up, everybody? All right, next chapter in the class is to figure out how shit works. We've talked in the group. Sometimes we bring up damn dog quit. Sometimes in the group we bring up gaps because I have a gap theory, and in crypto it's not as fluid, but in other things like stocks and forex and bonds, um, it is more widely accepted. It works a little different, but typically you see these gaps close. And I'll point out the gaps in the charts to you and show you what I'm talking about. This is USD CAD. What that is, US dollar versus Canadian dollar. This is a standard chart on TradingView. It's nothing fancy. It's not a crypto chart. This is a forex pair, a foreign exchange pair. One of the most popular ones, you've got the US dollar versus Canadian dollar, US dollar versus pound, US dollar versus euro, Australian dollar, the Chinese yuan, the Japanese yen, the New Zealand dollar, some other things, but USD CAD is a really popular one. So I like to use this one because we've leveraged traded it a lot before, and it moves pretty well, and there's money to be made on it. And we see that USD versus Canadian dollar has plummeted in value since March, ever since the stimulus. Interesting. It's almost like the dollar got devalued and went down, down, down. So basically, what this chart's telling us right now that for every one US dollar, it's $1.31 to the Canadian dollar. So it basically you'd have $1.31 if you went to Canada with an American dollar. There's 71 cents on the dollar. Just like in China, I can tell you right now that it's 7 cents on the dollar. It's a little over 7 cents on the dollar. In Canada, you go over there with a dollar, you have $70 or so, $7. Every dollar is seven. It's 1 to 7. It's a crazy ratio over there. When I went to China, we weren't quite sure what the exchange rate was, so I took like $1,200 U.S. cash to spend over in China because I thought, wow, I'll be in China. I'm going to spend some money over here, and it'll be pretty cool. And I wasn't aware that food for everybody for like 8 people would be $40. Food for like I'm not talking about no little bit of food. I'm talking about like this massive ass table of food was $40, and I was like, oh my god, I could live like a king in China, because $1, it's like 7 cents is a dollar in China. Just 7 cents out of your pocket is a dollar. So it's pretty crazy, but pretty cool at the same time. Damn right, Smithy, man. I'm trying to be a full time trader, dude. I don't want to be. I don't want to do heat and air for the rest of my life, man. This is just the plan to get to where I want to be. I've been doing it for almost 20 years, man. I'm tired, bro. I'm tired. Andrew ain't been doing it for like 3. And Matt's been doing it just as long as I have. So he's going to watch this and go, yeah, well. So anyway, let's get into the gap theory a little bit. So basically the way Forex works is it's like it's not an all time. It doesn't constantly run. The chart stops. I want to say at 7 o'clock U.S. Eastern time, and starts back a few hours later. So what happens is when this chart runs, or it might be 6 Eastern, I forget, whichever time it is. The chart will run all day long, and then at 6 o'clock Eastern or 7 o'clock Eastern, it'll stop for a few hours. And what happens during those few hours is kind of shady, but businessmen and businesswomen after hours start making deals. What happens is the chart will jump, and it's up to you to try to figure out which way the chart's going to jump, because when it jumps, you'll see it flicker. And we'll zoom into this one spot right here and highlight it here with a little rectangular tool. And that's clear and obvious there's a gap in the chart. Alright, so here's the way this works. Never should there be a gap in the chart. There should always be a connected stream of candles from one candle to the next, from one candle to the next. If you want to go with wicks, that's fine. But zooming in a little bit more, you can see that most of the time it's at least the wicks that touch, but more often than not, it's the candles. So right here, that wasn't candle to candle, that was wick to wick. But here, there's clearly a gap. It's mostly everyone's theory that when this happens, you get a gap, it will run up in the direction of the gap, whether it be up or down, I don't care. And this was clearly a reversal right here, because we can put fibs on this and find out that that's a reversal up right there, and it took off and launched. The idea behind this gap theory is when you see a gap, mind it. It's going to go and run for a while, but once it runs, most likely the gap is going to come back down and close again. And an easy way to determine where it's going to go back to is to put a line. See, right here we had a gap. That's the highest point before the dip and then the gap. So it took a while. This thing went way high, found some support up here and rode it for a while before it made a pennant. You can see that there's probably a pennant here. A trend line, something like that. And another one. Actually, there's not really a pennant. It's more just maybe a little one. Anyway, the pennant broke south. And when the pennant broke south, it come back down here and caught this line. This would inherently have closed this gap. There's a gap here. We could even narrow it up with this rectangle tool here to about there and about there. And we could have aimed for this to come down here, catch this point, and then do whatever it wanted afterwards. But you can almost bet every time you see a gap like this that this thing's going to shoot up in the direction of the gap, ride it out, and it will come back down and close this gap before it does something else. Now, we've seen this in other things like Tesla. UCAD was just an example, but this chart we've been using for our little examples to figure out what's going on, when it's going on, and whatever. We had a little social experiment in the group with the stock to see if our tools and indicators worked. And there's all these funky ass gaps, man. Clearly there's a gap here. Clearly there's a gap here. And what happened when this thing went down, made a gap, it shot down farther. Now, did it come back and try to catch it up? Yeah, it didn't make it. It kept going down and made more gaps, and they eventually closed with this wick. Erase this one first. Right about there was the start of the gap. Made this gap. It came down, come back up, and then this wick and this candle right here closed the gap. Now, it was free to do whatever it wanted to after this. It could have came back down and took a dump, or it could have went up and took a ride. Now, it did go up and take a ride, made an incredible reversal right here, and created another gap. When it created this gap, it kept going past the gap. So the first rule of the gap is when you see a gap, ride it out until your indicators max out. Did our indicators max out? Well, they went pretty damn high, didn't they? Look at that MACD. Look how high it went. Pretty cool, right? Stock. Big gap, shot it up to the top. I bet you could pull up the RSI here, which I like a little bit better than the stock RSI, just a regular RSI. Pull it up real fast. Oh yeah. That thing went straight into the overbought territory. Shot the gap. Gap took off, went up here and hit resistance. Right to the resistance line. Interesting. MACD topped out. Money line topped out. RSI topped out. Now, slowly and surely, This thing has jogged sideways, refused to break resistance right here, and has started to dip. And is making another dip. And it's going to ride sideways and make another dip. And slowly but surely, this gap, this one's been erased now because we closed the gap with this wick and candle right here. Now we have a new gap right here. It's going all the way across. We need to close. Now, what will it do? Will it close this gap and go farther? Well, it's not really up for us to decide yet. But since we ran this gap up to the top of the indicators and it started coming back down, we know it's going to close at some point. I wouldn't buy this until I saw this thing come down here and close this gap. Then I would even consider buying it. Before I ever, made a decision, I said, well, is there any gap? Is there a gap that needs to be closed? Now, it's more tricky to apply to crypto, but it's pretty common sense when it comes to stocks. Look, this is bearish. This is bearish. This is over 40 and coming up. But, we put fibs on this right here. I bet you it's going to show us that looks like a 50% and back down to me. Or maybe a 618 and back down. Yep. Look, 618 didn't make it. Come back down some more. What about this one? It's a smaller version of the same thing, isn't it? Look, this one hasn't even broke 50. This one was a 50, so it's going to come down, or if it's going to come up here to this 618. We don't really know yet. There's a gap right here. It created a new gap. So I bet you this thing's going to come up here and maybe close the gap before it comes down. We'll see. Might just jog sideways before it comes down, but I certainly wouldn't buy that yet. Anyway, you get the idea and the gist of the way the gap theory works. Is everybody following me so far? Alright, let's see if I can find. I think it's weekly. Maybe. You have to get tricky on this crypto stuff. Not this chart. Let me see if I can find the right one. Let's see. Maybe it's this one. Nope. There's one of these BTC charts. I can't remember which one. One of these BTC charts, it's a futures chart that the CME exchange uses, the Chicago Mercantile Exchange. The Chicago Mercantile Exchange is only open on regular banking hours. So what happens is that chart shows you gaps. All right, well, I can't really find it right here at the moment, so I'm just going to go back to the regular Bitcoin chart here that I have. Actually, that one's kind of drawn all over, so let's just do the Bitstamp one. There we go. And I will switch these candles to bars. Now this looks a little confusing at first, but this shows us that there might be gaps somewhere else. I know there was a gap at 11.8. I forget exactly where, but it had to close the gap at 11.8 because we had been talking about it on another group before this group was even formed. There was a gap at 11.8, and I don't remember exactly where it in here. But the way these bars work, if you look close, you see these should connect. Almost all the time they connect. And if you find the right chart, I think it's the other chart, but the bars don't connect on one of the charts, and it's the CME chart, the Chicago Mercantile chart. And that Chicago Mercantile chart showed a gap way up here up top. So I knew at some point Bitcoin was going to come back up here to 11.8. Now, I didn't know how soon that would be or how long that would take, but I knew it was going to do it. But the problem is there was also a gap way back in the day all the way down here at the bottom of Bitcoin. And, that kind of worried me. I'm like, dude, no. I kind of worried about it. I was like, man, if this big gap is way down here at the bottom, like right here, it's a huge gap. Man, this thing's going to come all the way back down here one day and close this gap down to like $21. Well, it's never happened. And I don't think it ever will happen. And I think that's where crypto's a little bit of an anomaly. I don't think it's going to give us the same kind of exact look that a stock or Forex or bond would. But I think it's going to be similar. So the way it applies to crypto. All right. So a while back we were watching the charts and I think ZRX did a push up and it was on the other stream. All right. So we're on the other stream and everybody's watching ZRX and we're going, oh my God, ZRX took off. It's going to go again. It's going to go again. Well, me and some other guys looked at it and I said, no, it's not. It's not going to go again. We're waiting. It's not time yet. It's not time yet. Well, how do you know? How do you know? How do you know it's not time yet? And I said, dude, there's a big gap. It's like, what do you mean there's a gap? I'm like, the chart has a gap in it. It's got to come down and close the gap. And they're like, what gap are you talking about? Well, quite simply, there was a gap in the chart after this thing shot way up and, got everybody all crunk and happy. It jogged sideways for quite a while and actually came down first before it jogged sideways. Now, what did I mean by closing the gap? Well, initially, the first thing we need to know about gaps on crypto is the same as this Forex and everything else. You start from left to right. You're not looking from right to left. You're always looking from left to right. I'm looking for these wicks to touch. Okay? I'm not going to be able to, since the crypto market never really closes, I'm never going to see the gaps that I'm going to see on the Forex or the stocks or bonds. So what I'm looking for is wicks to touch because every candle should start and stop the very next candle before it. It's pretty common sense. If it never stops, why don't the wicks touch? If the chart never stops, why don't the wicks touch? So, by using that logic, when we have something like this right here happen, where this candle starts way up here and dumps way down here, and leaves this wick way behind, it creates a gap. All right, when this gap happens, it does its action and keeps going some, just like the other one did. It hits the gap and then goes past it, and eventually, slowly but surely, it comes up here and tries to close the gap, didn't quite, comes back down again, works, and finally, to this wick, comes up here and closes. After it closes the gap, it's free to go again. Now look, created a new gap from here all the way up here. That's a massive gap. Massive gap. Here's the thing. It doesn't look like it's coming back down, does it? So this is where I have a problem. I don't feel like we can constantly look so far back on crypto. I almost feel like the gap theory works best with the pivots, and that's it. We're looking for, excuse me, one or two pivot sets back for gaps, and that's it. Once we pass that, crypto moves too fast, since the market never closes, for us to be looking so far back to find gaps to wonder, is it going to go close it? Now, I was right on this one up here when I said, no, this thing has a gap. It's going to come down and close. It did slowly get down there. It went from, imagine all this wasn't here. Okay, imagine all of it wasn't here. We were way up here, and it came down and did this. And I was like, okay, sweet. Well, from up here at this, top of this wick up here, it created a gap. It finally closed the gap. And I said, hey, look, it closed that gap, and then it shot up again and did another funky move. And we were like, okay, that's cool. Let's see if it goes. And it never did. It created a pennant, shot up, created a pennant, shot up, created a pennant, and finally broke loose. All right. Well, it took a while for that to happen. But I remember saying, no, it's not ready. It's going to close the gap. It's going to close the gap. And slowly but surely it did. It went all the way back down to, I think I said 31 cents. But look, right here. 30 cents. It went all the way down to, it went right dead at 30. I think I said 31. So it went past where I thought it would go. And basically it come down to me looking at support lines and resistance lines and saying, okay, this thing's going to find a support or find a resistance before it goes back up again. And it's going to give time for the bands to get tighter. It did. It's going to give time for the 8 EMA to catch up. It did. It gave time for the MAs to catch up. They did. The gap theory supports or is supported by the other indicators. You know, when we see one take off and outrun everybody, and you go, oh, it's not going to stop. Well, we've seen that they actually do stop, and it takes them a while sometimes, and they act a little funky. But they have to wait for the bands to get tight again. They have to wait for the 8 to catch up. The gaps get too wide. The chart, everybody, you know, we see it. We see everybody, and we're going to go, oh, people are going to FOMO. And then you start seeing the chart pull back a little bit here and there, and pull back here a little bit here and there. And you go, okay, well, it's clearly not FOMO at this point. It's just trading. Watch it, ride it. Let's see what happens. And little by little, we've gotten better and better at this. So, excuse me. Let me read for a second. So theoretically, if we were to close the gap, it would have been at the break of a pennant. Also, could it be that big buyers inhaled and that the gap was not connected? Possibly. Possibly. But like I'm pretty hardcore on the fact that it's mostly bots at this point. After watching the ledger, watching the charts on Binance go 1 XRP at a time, these stupid, crazy, dumb numbers that we've never seen before. Like, no one's going to trade that. And after I saw that, that pretty much locked it in for me. And we've seen the charts do mostly technical moves. Every once in a while they don't. Until I start seeing them go stupid, crazy, untechnical, I have a feeling that it's going to keep continuing. It's just tough. It's a tough call. Yeah, when I also saw this pennant break north, I thought, wow, that's pretty cool. I remember riding this right here, and I didn't sell this till like down here because I thought it was going to keep going, and it didn't. It stopped. It actually did a 1414 right here. I thought it was going to do a 6, and it didn't. It came back down, and then it did a new one. Took off again. Made me look stupid. I sold it too quick. Got gun shy. Wanted to jump in and jump out too quick, which we've also learned we shouldn't do. We've also learned not to hold too long. I think we're getting better at finding when to get out and when to get in. We're learning that sometimes a couple days is fine, and sometimes a couple weeks is too damn long. Mind the indicators. And when the indicators match, we ride them. Yeah, I do it too. So the thing is, like, I wanted to get out of, like we were talking, me and KG were talking this morning, and I wanted to get out of Nano because Nano was up 14% this morning. And I was like, man, it's up 14%, bro. I should get out right now. And I was like, you know what? I don't want to be that dude who gets out too quick because, you know, I'm looking at the weekly chart and that motherfucker's way up here. It's way up here. I'm like, man, if I get out of this too quick, I'm going to feel like a fool. So I'm like, I'll stay in. And what did it do? It came down and checked on R3. Like, whatever. So there's support here now. You know what I mean? Yeah. It's all good. Like, I got support. Let's see. Yeah, I got support right there. So, man. Let's look back here. Do I got support over here? Do I? Let's go on weekly. Boy, that got ugly real quick. There we go. Mm-hmm. This is just hitting some slop and getting caught in it. I already had that resistance on the pink one right there. So, is there anything to hold it up here? Let's see, I got 2 points. Yeah, right there. Right about where it's at. Man, damn. Okay, well that's cool, because what I'm thinking is going to happen here is... Yeah, okay, that makes sense. In between these two purple lines. So right in between. Somewhere around in there. That makes sense. And that's why we draw lines, y'all. So, let it bounce off this red line. Give it a little bit, and let's see if it does as the RX move and keeps going some. I'm willing to ride it for a little bit more. I've only been in it for 3 days or 4 days. You know, so I'm wanting to make sure I don't miss the XRP bus. But luckily XRP, you know, it does what it does. And moves on its own little grandpa style pace. You know, whatever. it went up and hit the one line and then failed 786, and now it's pulled back down. So we'll see if it takes off and does another try at 786 and breaks the crocodiles or not. I don't know. I don't have total faith in it. So. Right, yeah, oh yeah, oh, for sure, man. I draw pennants all the time, Acre. Like, that's one of my favorite things to do. I'll draw resistance lines. I picked up pennants on Forex way back in the day. And I remember looking at it when I first started, and I would go, man, that kind of looks like a triangle. And it looks like it's stuck in the triangle. And I was like, well, you know, I didn't know it was called a pennant. I was just like, it's just stuck inside a triangle. I wonder which way it's going to go. And I felt foolish that I didn't know. What I know now. Let's go back to UCAD here. Excuse me. So, at the end of this triangle, you see it formed a clear resistance, and it clearly had some resistance here. I could draw this triangle a little better, and I will. Let's fix it. Make it a little cleaner. Something like that. Not the cleanest. Fallen wedge. So, we're watching this thing not be able to break resistance. Struggling. We've got an upward move. It looks like it wants to break. It didn't quite break the pennant. And the orange is over top of the blue, and boom, it crossed bearish. The money line was already showing us that it wanted to go down. It went down. The RSI was already pointing down. We came down. Pull up some indicators here. Oh, looky there. We were oh so close, but close doesn't win. The bands got tight. When the bands got tight, we were under the 50. We were under the 21. The 21 was over the 8 in a downward move. See, now you're looking at this and you go, man, I had a pennant and it was under the 50 and the 21 was over the 8. And I'm using that in Forex because it matters. The 21's over the 8. Our indicators are pointing down. Our pennant's moving to the right. We're not breaking resistance. We have resistance in a moving average. Man, there's a good chance this goes down. It went down. Well, I used to just look at it and go, oh man, it's forming a triangle. I wonder which way it'll go. Well, now you can look at a triangle, match it up with the indicators, and know. Plus, you had a gap down here. Pretty damn good chance it's going to come down here and close this gap after it went wild right here for a couple weeks. Okay? Not that complicated. Absolutely, indicators are on point, and it works all the time. It works for Forex, bonds, stocks, doesn't matter. Let's look at what the Treasury bonds are. You really want your head to hurt. I think it's 10-year. There's 10-year. Man, I don't remember. US 10. Oh my goodness. God help us. Look at that shit, y'all. Oh my God. Get me, baby. Son of a bitch. That's so stupid. Look at that. That is so stupid. What are we doing? When the stimulus hit, look what happened to the bond market. Straight turd. Man. That shit is nasty. Oh, let's look at crude. Crude oil. Dude. Yeah, look at this. Yeah. Yeet. Like, come on. What are you doing, bro? Look at the damn chart. Look at this shit. Oh my God. 1 penny per barrel for oil. What are we doing? That's when Abu Dhabi dumped crude on the market. That was his crude oil. Even like the normal pretty looking chart, still look at that, $10 a barrel, and that was, I'm telling you right now, overpriced. There was a gap right here. It shot the gap, took off, and what happened? It slowly come back and closed that gap. Now look how tight that thing is right there. My goodness. What y'all want to bet's about to happen with crude oil? We can have another little social experiment right now. Goodness gracious almighty. Put this thing on the weekly. Ooh. Look how accurate the pivots are, man, on stocks. Goodness. Only straight right there. I can tell my computer's recording right because it's moving faster. Did I hit that right on the damn head? Man, shit, I hit that right on the head. Look at that. Let's go. Well, it looks like the 786 assassins are out on the weekly. Oof. That weekly, though. So it's stuck between the 50 and the 8 on the weekly. Looks like we haven't crossed over into bullish yet on the MACD. It looks like the money line is over the bands, clean. It looks like the RSI is clean up. We've got the MAs flat. We have the 50, 100, and 200 lined up perfectly, as we like to see. Yellow, blue, red from the bottom up. Man, I'm telling y'all right now, this shit looks tasty. Look how tight the bands are. And moving up. RSI, plenty of space. Money line, where are you? There it is. Like right now I can feel my throat's tickly. That's all good. We're in the bullish territory. Flat as can be. Pinch together, make a decision. We just broke the 200 on the daily. I'm willing to bet you this goes up. Right now it's selling at $42 a barrel. We're right at the 786. Hasn't broken it yet. Maybe it tests down here before. We haven't even got this golden cross yet. It's pinching, turning and pinching, moving sideways. How much longer can this move sideways? I don't know, man. Not much longer. It's stuck. It's going to move. This shit's going to go one way or the other. Man. Tough call, though, right, y'all? Look at that. That's interesting. It'll probably soar in this inflated market until end of year. 821 breakout's going to be juicy. All right, yeah, so what do y'all think? Is it going up or down? Negative $38. Exactly, bro. Petrodollar Ponzi scheme fail. So is this crude oil chart going up or down? It's just a tough call, right? But if this was crypto, we would be saying it's going up. We would look at it and go, man, I kind of like that. The indicators are pointing up. We haven't crossed over yet. Well, actually, we have crossed over into bullish. This is 4-day. Man, I don't know. Like, it could take another dump right here, right? But I don't know, man. These indicators. That's a lot of resistance to get through. Ugh, tough. I'd like to see it break 786 first. If it can break 786, I'll bet on it to go up. And that's a sweet 50% from the 786 just back to the one line. That's a sweet move. Good soft cross, I agree. You know, it kind of looks like it's going to be a soft cross. It kind of looks like it's going to be a soft, lazy cross and sit here and fiddle around instead of popping. Because it did go across. You know, it did break. It kind of looks like bread, doesn't it? It kind of looks like BRD. Right here, bread. It's got this move where it's pinching between the 50, between the 8 and the 200 and the 50s down here. It's kind of the same move. Maybe it dances to the right a little bit and then goes. Because it's closed this gap. Tough. I wouldn't make a bet until it crosses it. What's that percentage up over the 786 right here? 2%? Yeah, man. Break R3 and hold it, and I would go. If it breaks R3 and holds, that's a buy, and I'll take the 47% and smile about it. And then you could get a run up all the way up to, you know, up to the 1618 line or whatever. Don't bet on that. It's crude. It could take years to do that. And the way it's looking, that they're going to dump more oil in the market. Here's another thing about stocks and stuff like this. Forex. The news kind of does matter. The economy matters. If we have something happen, it spurs buying and selling. It spurs market sentiment. So, yeah, I don't know, man. It's tough. I want to say it's going to go up, but it's either tough. I bet sideways. How about that? I bet sideways for a little bit anyway, for at least a week, maybe the end of the month. Anyway, that's gap theory. Gap theory isn't that complicated. We see the gaps. When we have a gap, it tends to go past the gap, run its course, floor the indicators or max the indicators, whatever. After it maxes or floors them, it slowly works back and closes this gap back up. Crypto, I want to see Wix touch. Real quick, the almighty whore of all, XRP. We'll bust through this real fast. What am I talking about, gaps? Okay, so when this chart started, there were no gaps. Obviously, we had this move. Bam, it went up. Yada, yada. Real nice. We already went through all the TA on it. There were no gaps. All right, so when this thing shot up, it created a gap. I think it closed it. It closed it. It closed it. It came down, found support, blah, blah, blah. The next gap would have been over here. See that? This gap between the top of this and the bottom of this, that would have been the gap. Now, the thing is, you could argue that it didn't have to close this gap because there was this hill over here, this run up and fall down. So all it did was go up, break this over here with this move, and settle on top of it. Fine. I'm cool with that. I can understand that one. I'm good. Next problem I have is there's a gap from this wick to here. Okay? This is that internet calls XRP 5 cents gap. Okay? This never closed, and there's nothing over here to the left to suggest that it needs to go, that it settled on top of support or anything. There's no support over here at all. So when this thing did this move, which we did the TA on it, and it was a two line run, and it came back down and settled on the 1618. Okay, when it did this, there was no support here. This was a bot traded move. Okay, it created its own pattern here with a bot with trading and did its own thing. There's nothing to support this thing going up here and riding and staying up here. I have no answer as to why it never came down here and closed this gap down to 5 cents, 6 cents, whatever. This gap still remains here to this day. Now, are all the other gaps closed? Well, it took a while, but yes. Depending on the chart you use, let me get these indicators off here. Depending on the chart you use, like I've seen another guy had one that wasn't Poloniex, and he used a different one, and the chart that he had showed that there was a gap at 11 cents. And if you see this clearly, his didn't show this gap right here. Okay, only Poloniex shows it, but his showed the gap, to 11 cents or so. And when you start rolling this thing out way back, you see the gaps a little better, and you go, man, look at these gaps, dude. It needs to close them. Well, look right here. Come down here. We had a gap. We wish it would close. Bam, it throws a wick down here. Oh, hell. Whoops. Grab my cursor here. What would have been a gap comes down here and gets sort of a touch with this wick. Bam, comes down here, hits it, and then moves up. Okay? The guy on his chart I was talking to on the internet, on Twitter, he was like, okay, the gap was at 11 cents, and this thing dipped down to 10.6 on his chart. He's like, that closed the gap. The gap's closed. I was like, okay, well, you know what? If that's the case, cool. And you've seen here we had a gap. I'll just see it right fast. From here to here, from this point to this point, well, what happened? It took a while. It came down and tried to close it. It came back up, didn't. But look, right here, settled down on top. This did right here. Found support on top of this. Made a move. Wasn't enough. Kept going. Did it again. Kept going. All the way down until it attempted to close this gap over here. So, is it a surefire bet? No. But usually it closes the gaps. So I'm looking for them to close the gaps when I see a big run. When I see a big green candle, this is why we're looking to see red behind it. Not only is it catching the 8, it's closing the gap. It's not a surefire technique, and I'll admit that. But you can't tell me that this thing doesn't act like it wants to close gaps. There was no reason for that thing to spike this far down, except it's looking for support. All right. Well, there's no support here. Why did it stop? Like right here was the last support line. What made that thing stop where it's at? Absolutely nothing. Okay. There's no support line there. So why did it stop? I didn't do it. You could argue that maybe down here, and it wicked, just price action wick pulled it down. But if that's the case, what was the price action shooting for? Was it shooting to mine this gap? And if that's the case, okay, cool. That means the gap's closed and doesn't need to go down any farther. And we can use that to say, okay, well, the chart bottomed out. I'm ready to buy. I don't care what the token, the stock is, doesn't matter. I seen it bottom out. I'm ready to buy. And they help you get a better advantage on buying or selling. I want to research what happened those days it created the gap. Just curious. We're going to be pissed if it throws a fake out and wicks down and closes the gap. Son of a bitch. It looks like it's drawing towards the gap. At least that's obvious. Right. So this is what makes people think it's going to 5 cents. I get it. When they say 5 cents, they see in this action where it come up and didn't break and fail. Well, now we've actually had a break. And we've actually broken our trend line. Our long-standing awful trend line is finally broken. Now we're going to move up, or we're going to sit here and idle. Because if we idle, we're taking a chance on dumping again, just like we did over here. Taking a chance on dumping. Do you want to dump again? Because I damn sure don't. I'd rather it just went now. And if it wants to go down and give me another chance to buy, that's fine. But I would much rather it just go. And we can get this shit over with. So, anyway, that's gap theory. That was 49 minutes. How much time did we lose? We didn't lose a single frame. That's what I'm saying, man. Weird. Anybody got a question? I know it seems complicated, but it's not really. You see a gap, it's going to run past it. After it runs past it, it's going to retrace back towards it. I don't care whether it's a gap up or a gap down. See a gap, it runs past it, does its move, slowly pulls back down towards it. You mean blown as in you didn't understand it, or it's too much to handle? Oh, eye-opening, yeah. And it's really a trip, man, if you just look at stocks, dude. That's the really fucking nutty stuff. When me and Mullet were saying it needed to come down some more on the Dow, and we were like, nope, needs to come down more. There's a reason I was saying that shit, man. Like, right here, you could say support or resistance was made, and it did its thing, broke it, and took off. But from here, it was just gone like a fucking rocket. And this is on the weekly chart on the Dow. I want you to look at this. Since 2017. Look at the yeet the Dow did. Just straight up. 45%. The Dow Jones. 45%. Straight up. Okay, after this happened, I want you to look. There's a gap here. Now, after it did this gap and made its move and took off, it made another gap and took off. And then, son of a bitch, look what's behind it. Dumpy Dumperson here. Dumpy Dumperson pulled us all the way back down to where we had this big takeoff. It took 3 fucking years. It took 3 years for that gap to close, but it closed. Now, interestingly enough, there's another gap down here. It's not as big, so it was a theory that it might not even go down there. There's another gap down here. But now you're looking at it and you're saying, oh, we had this down. We had this We had this dip down and it closed gaps back up this direction. There was a gap from here to here and it closed it. Okay, fair enough. I'll buy that. Fair enough. But there was other gaps. But the major one was since 2017 when they started quantitative easing. And quantitative easing is quite simply excuse me, printing money, pumping the economy up with money. This is some shit that's gonna mess with y'all's head a little bit, but I want y'all to understand this. So, okay, you want the stock market to go up. How do you make it go up without actually doing more business than you were before? How do you get the stock of Bank of America to go higher without Bank of America actually giving out more loans and making more profit off of interest? Well, you give that bank a loan for a low interest rate, and that bank can then buy stuff with that loan. Okay, they could loan that money out to a customer, and that's a investment, or they could buy something with that. They could buy a building and lease that building out and make income off of that. All right, so essentially quantitative easing, the government gives out a super low interest loan to Bank of America for like, I don't know, 2%. All right, that 2% loan, we're going to pull this up real quick so I can show you. Bank of America. BAC, I said BOA. Bank of America. Okay, so let's pull up the daily. I want this to make sense to you. Right in here, we'll use this one. Right here. All right, so Bank of America gets a loan from the government at 3% interest. Okay, at 3% interest, they get a $40 million loan. So Bank of America takes that $40 million and they buy the price of their stock, their own company stock. They buy their own company stock at $27.94. Okay? $40 million worth of your own stock. Bank of America buys it for themselves. This is called loan buybacks. Okay? Or buyback loans. Basically, the government gave you a loan to invest money. You invested the money in your own company. You bought your own stock. It sounds a little whack, but it's legal. So you buy your own stock. Well, $40 million worth of purchasing over a week earns you an 8.3% gain on your stock price. Okay, so you had a 3% interest loan. You made 8% interest in a week. You took $40 million and made 5% free. Let's do some math real quick, because I'm not the best mathematician person, but 40 million times, that's $2 million profit they made in a week. $2 million profit in a week, and you paid your loan back in a snap of a finger. The government gets no money back for interest because you paid your loan off so fast. You didn't do any good business in your company. You didn't do any better loans. You didn't earn more money off of interest. You didn't sell some mortgages. You didn't give out some car loans. You didn't do any of that. All you did was buy your own stock and make it look like your company did something good when you got free money from the government, paid it back without having to hardly pay any interest, and got $2 million for free cash. Cash money for free. That's called quantitative easing. That's a government loan buyback. This is what happens is this artificially pumps the price of your stock up. Okay. Now, what does that matter? The price of the stock goes up. Who cares? Okay. The problem. When you see Bank of America doing this, and then you see them not giving out raises or not hiring on new people, and you go, well, if you're doing this much more business, how are you doing this much business without getting more employees? All right, if I've got Walmart, and let's not even say Walmart, if I own a gas station and I'm killing it and I'm doing great business and I need to open another gas station, I got to hire a whole nother staff to run that gas station. Well, here's Bank of America killing it, and they got all this money coming in, but you don't have any new buildings. You don't have any new gas stations. You don't have any new employees to help you earn that money. You just got this money. Well, how did you get it? Okay, this creates negative sentiment. All right? Investors see that and they go, well, why? Why is this happening? Why is this happening? And then these earnings reports come out, and then the farm reports come out, and then the mortgage reports come out. And then after this info comes out little by little by little, and they start to get more data, and they start to realize that the stock prices that are up there are kind of horseshit, it hits a boiling point. And when it hits a boiling point, shit dumps. And what happened? These stocks dumped. Almost every stock was at an all-time high. Almost all of them. Go back to the Dow. The thing was all-time high. I mean, it's 29,000. By the way, a nice round number, isn't it? 29,000, and it dumped at 29,000. A psychological number of 29,000. It held it for a few days, and then Dumperson created a gap, didn't it? That gap kept going and going and going. So I'm willing to bet you hard money right now that this is going to go up here and close this gap. Not only is it going to close this gap, it's going to keep on going. Furthermore, if you want to put a fib set on this, me and Andrew were talking about this today. We were like, dude, I was sure this thing was going to dump when it hit the 618 line. It didn't. It settled back out. We thought it was going to dump right here and come on down again. It didn't. It hung up and took off again. Broke 786, and we both saw this and we were like, she's gone. It didn't do it. It's still hanging out. Still hanging out. But it's still over 786. It's still got a chance, man. Anyway, once this started happening, the Rona come in, companies started laying off, yada, 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 more negative sentiment, more negative sentiment, more negative sentiment. And then the stimulus. Okay, now that stimulus put everybody some money in their pockets, gave everybody some unemployment money, gave some small businesses money so they could help out customers and help out employees and everything else. So you're propping up something that probably should have been allowed. I know this sounds bad, but you're propping up something that should have been allowed to finish dumping. If you let this market dump, it'll correct itself. Eventually, these buyers are going to step in when the price is low enough. That's how it works. Once it gets far enough down, the buyers go, oh shit, my indicators are solid. What happened? Look, y'all, come on now. I don't bullshit. Look at that. That is oversold. That is mega oversold. What do you do right there? Someone, please, God, tell me, what do you do right here? You buy all that shit. You buy all of that shit. That is the bottom of the chart. I'm buying that. 10 out of 10. The MACD dumped. Interestingly enough, the money line stayed inside the bands. It's been a buy, even though it dumped. So, whatever. When I see this on the RSI, I'm buying that every single time. This is the way the market works. If you just let it dump, if you just let it ride, the people who run the markets, us, buyers and sellers, will handle it for you. when you do these artificial quantitative easing and stock buybacks, and now they're corporate bonds they're buying. Corporate bonds. They're buying corporate bonds. Oh my God. You're faking it out. You're making this stock market fake. Political crap apart. It doesn't matter. I don't care who you like or you don't like. You can't fake the market. You can't. You can't. It pisses me off. I'm not a political guy, but you can't fake the market. We're going to catch up to you sooner or later. That's all there is to it. So, anyway, anybody got any questions? Somebody's got to have a question. Oh, bro, I lost in 2007, Frank. I lost almost all the money in my 401k. Lost my house. Ex-wife lost her job. Lost my savings. All of it. It was all gone. That's just the work. I just got worked. And if I encouraged everybody to watch The Big Short, because The Big Short is exactly what I just told you. The market catches up. You can't fake us out for long, okay? We're going to find you. We're going to figure this out. The chart has the answers. When you watch the movie The Big Short, you're going to go, fuck me. How did we not see that coming? That was a layup. That was an alley-oop through to the front of the rim. We literally had to grab the ball and drop it in. So, and the same thing happened on this big dump last time. I was talking to my girlfriend's dad, and he's retired, and he said he lost almost $100,000 on this last dump. Now, he's made most of it back, but the point is, he lost $100,000 before it came back. He's just a guy. He's not rich. He's just a guy. No one should lose $100,000 who's just a guy. Like, that's insane. Which indicators, Acre? On the Dow? Yeah. Number one, we hit a psychological level of 29,000. Number two, pivots. We were over R1, but we didn't hold it. When we didn't hold it, it immediately dumpersoned. It was over the 8. It rode the 8 for a long time. All trends eventually end. And this son of a bitch rode this trend for a long time. Let's look at the stock. We already know about the RSI. Oh yeah, look at here. RSI was overbought. Right here. When it broke R1, it was overbought right here. This would have been a moment to sell. Now look back here. Good God. Look at that RSI. Whew. And that was a moment to sell, wasn't it? All that was a moment to sell. God almighty. Look at that thing go. Jeez. But what goes up must come down. Okay, and it came crashing down over here. So don't get worried if you miss your moment. You're going to get another one. We had a moment right here. This was overbought. It took off. People saw the selling, and the selling kept going. Broke the 8, broke the 21, broke the 50, broke the 100. I remember watching this break the 200 and watching me and Mullet were talking about it. I was like, bro, that thing's going to smack that 200 and bounce up. Watch. And he was like, yep, I agree. The next day, that bitch was way down here. And I was like, wait a minute, what's going on, dude? Like, this isn't real. I was like, good thing I didn't sign up for 401k at work. Oh, God. Me and, true story, me and Andrew, so, all right. Was it like a week, maybe a month? Maybe it was a month before the dump. Me and Andrew went to the office because they had this meeting at work about the 401k. So my company switched 401k that we work with because no one was making any money on it. You know what I mean? It was pretty much moving sideways a lot, or they barely make anything. So the company was like, let's switch people. So the guy comes in and he starts talking to us, and he's got this slick back hair. He looks like a straight New York investor. You know what I mean? He's got that accent. And he starts talking, and he pulls out this big chart, and he's like, "Look, man, since 1971, we've been making money. And this chart's been going up for this long." And I look over at Andrew, and Andrew gives me this look like, "Bro, did you hear what he just said?" And I was like, "Okay, let's just let him talk." So he keeps going, and he's like, "Man, look, I'm telling you right now, the market's right here. It's going to go to right here, and we're all going to make money." And I was like, "But you just said it's went up for 40 years." I was like, "It's going to come back down." So I look at Andrew, and I text Andrew on my phone. I was like, "But when's it going to come down?" That's what I text him. So the guy starts talking, and he gets to a point, and he says, "Do I have any questions?" And I said, "All right, I got a question." No one would say anything. And I said, "All right, I got a question." And I said, "Dude, the government just okayed quantitative easing, or just come out and said they're going to stop quantitative easing that's been going on for 2 years." I was like, that's going to negatively affect the market, right?" I was like, "We're at an all-time high on the Dow and the NASDAQ." And he's like, "Yeah." I was like, "So it's probably going to come down." I was like, "Don't you think it's a bad idea to buy right now?" And he's like, "Okay, look, we know the market's going to crash." And I said, "Whoa, whoa, whoa, whoa." I was like, at that point, I had to stop talking because he wanted to answer the question. So he says, "We all know the market's going to crash." And at that very moment, I picked my phone up and I text Andrew. I said, "What the fuck did he just say? He just told us the market was going to crash, and everybody in this room is about to give him money." Like, that was my thought. I looked over at everybody in this room, and it's all a bunch of, middle-aged guys or guys that are my age or a couple guys that are younger. And they're all just about to hand over money every week to this guy. And I said, "He just told us that the market's going down. He just told you the market was about to dump. Why are you going to give him money? Stop." And then after this, he says, "All right, who's ready to sign up?" And everybody whoops out that pen and starts writing shit down. I was like, "Stop. What are you doing?" I looked at Andrew and I was like, "Bro, I swear to God, you better not sign up for this." He was like, "There's no way I'm signing up for this. There's no way." And it wasn't 2 months later, and the fucking market was scraping the bottom of the barrel. And I was like, exactly. And I come into work that day, and I was like, "Yeah, looks like the Dow took a dump." And they were like, "Yeah, man, yeah, I saw that." And he just gave us this big spiel about how we're going to be able to monitor it ourselves. We're going to be able to look online and see our statements. And we're going to be able to change it if we want to change it, make it less aggressive or more aggressive, or we can change different types of things we'd like to invest in and all this stuff. And it dumped. It dumped. And people were losing money like crazy. And I remember thinking, dude, I raised the question in front of everyone, and y'all still handed over money. And this was the second idea that I had. I was like, man, I think me and Andrew talked about it like an hour or two later. I was like, dude, there's no way I would felt good about myself if I had walked in that room and told everybody to give me their money, knowing the market was going to go down. How do you do that? You got to have a set of stones on you, bro. So it was a real interesting story in my opinion. It really happened. Me and Andrew he could tell you the same damn thing. To this day, I still don't put any money in 401k. Not a dime. Not a dime. My company matches 25% of whatever I put in, and I don't put anything in. They put an automatic contribution in there, I think, but I don't put anything because I don't trust it. Because you're damn right, he got commission. You damn right he did. So, anyway. Yeah, everybody, Acre, I'm reading this, what you're just putting out. Yes, people had a lot of chances to cash out. Let's see. Oh, I know right now. What are you going to pull out and park or buy at the bottom? Um, uh, I sold my MoneyGram. I don't own any other stocks. I own some golds, precious metals, and crypto now. And I got the Forex thing going still, making a little here and there. Money's kind of went sideways lately, so the market's it's all red right now. Look at this nasty red shit over here. Come on, Nano. Get your mind right, bro. Ugh. come down and touch the 8. I gotta wait another week. That's fine. Oh my God, everything's just dumpy dumpersons on me right now. That's fine. It'll all come back. All right, y'all. So anyway, I'll get this video uploaded. I had way too much rambling on here for myself. I don't like to ramble like this. Anybody's got any questions, shoot them to me. I'll get this shit loaded up on YouTube, but it's going to be private. I'll only do the public videos once a week or maybe once every 2 weeks. It's up to people to ask me. It ain't up to me to go out and find people. So anyway, y'all dudes take it easy, and we'll see y'all on the gram. Not the Instagram, the Telegram.